Hello, I'm Mary Kurzweil with the CattleFax Closing Bell. Today's Closing Bell is brought to you by Zoetis Beef. Whether you call it bovine respiratory disease, BRD, shipping fever, or cattle pneumonia, it's a problem. Zoetis helps provide BRD solutions and expertise for every stage of cattle production. When an outbreak occurs, Zoetis has a full lineup of antibiotics to get it under control quickly and get your cattle back on feed. Visit brd-solutions.com for the full line of antibiotic products and insights from Zoetis. Carcass weights moved lower in this week's data, with steer weights down 5 pounds and heifers down 4 pounds from the previous week. Still, weights are historically high, as the lower move is coming from new all-time record highs that were set last week. For steers, this high was 989 pounds, and heifers reached an 897-pound average. While 1 week does not make a trend, the high in carcass weights for this market year very likely were seen last week, and now we should see more of a sideways trend in weights near term before the seasonal decline in spring to summer. This may seem early to see the highs, as three of the past 4 years have seen highs in weights come several weeks later, but looking back further, the seasonal would suggest this is a more normal time to be seeing the peak. Part of the reason for this is increased harvest that is normally seen before the end of the year, as packers are more aggressive to fill orders and meet holiday rib demand. This year has been no different, and while kills are still well behind year-ago levels, last week was the second largest week of fed slaughter for the year at 489,000 head. Recent increases in slaughter has helped front-end supply get more current, so this will also be limiting to further increases in carcass weights. This week is off to a strong start in slaughter, but will likely see a smaller end of the week compared to last week, as the packer margin incentive has quickly gone away. Last week, packer margins were estimated at $118 per head in the green, but with the fed cattle prices moving sharply higher and the beef cutout softening, this week's packer margins looks closer to a break-even or slightly negative on average. Fed cattle averaged about $7 a hundredweight higher last week, near $222, and will likely see a similar increase this week on average, with cattle trading at $228 to $230 so far. With these cattle prices and a cutout holding steady next week, that suggests packer margins next week would be negative by about $110 a head, a huge swing in only 2 weeks' time. Part of the softness in the cutout is the rib demand slowing, but it can also be attributed to the large production levels. Last week was estimated to be the largest fed production of the year, with the second largest week of fed slaughter and the large carcass weights. With the recent loss in packer margin, expect more moderate kill levels ahead, which should help the cutout find some stability. Even if weights have already peaked for the market year, they will likely remain historically large, as cost of gains, cattle prices, and overall tight supply will continue to incentivize maximizing every animal's potential. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.